Hello everyone, this is Mirna Meher from EFG Hermes and welcome to Taaleem Holdings third quarter 2023 results conference call. I'm pleased to be joined today by Alan Williamson, Taaleem CEO, Arnaud Prudhomme, CFO, and Noura Ghannam, Senior Investor Relations Manager. We will first start with the presentation from management side and then we'll open the floor for the Q&A session. Please go ahead.
Thank you, Mirna. Shukran jazilan. Assalamu alaikum. Marhaba. Thank you for joining us today. This is Alan, CEO of Taaleem, and as Mirna said, I'm joined by Arnaud, who will be covering some of the high-level finance later in the presentation. Our intention is to present some high-level data which is available on our website over 15 to 20 minutes max, and then hopefully we will have some question and answer. I would like to thank EFG Hermes again for hosting our third presentation. So thank you, Nora. If you can move the slides on, please. I meant to say thank you for joining us. I hope I did. It's another very strong quarter for Taaleem. We are particularly proud of ongoing positive results and performance. We have a year-on-year snapshot here which shows considerable increase in student numbers, which is obviously relates directly to our revenue of 30%. Increase year-on-year in revenue, which is leading with a controlled cost agenda to a 25% increase year-on-year in EBITDA and a profit of 34% increase. One cautionary statement which Arnaud and I have repeated from day one in our particular industry, in the education business, revenue runs approximately for 10 months in relation to school fees. There is obviously a small amount of business development revenue that continues where costs run for 12 months. So while we have another set of fantastic results, as we have repeated in previous meetings and one-to-one meetings with investors, which we obviously continue to welcome from you, you can't simply do another calculation for the Q4 in terms of a multiple. Our revenue tends to run in terms of student fees for 10 months and costs run for 12 months. That aside, we are very proud of the positive performance. If you take just a quarterly performance, again, the key for us is revenue relates to enrolment. So again, another positive picture leading to obviously good EBITDA and net profit performance. Arnaud will cover EPS and net debt later in the presentation. So if we go on to our financial highlights, what I want to stress here in terms of performance is the increase in enrolment year in year. So most education groups would be looking for strong improvement year on year, but we have also performed well in this particular year, both in the PPP, which has went from 15.6 to 15.8, and in most importantly in terms of our profitability, a year-in-year improvement in enrolment by around 180 students. So 12.5 to 12.7 within the year. Our schools have continued to grow as the year has progressed, and that's very positive and reflects the ongoing strong economic picture in Dubai and Abu Dhabi, with more and more people coming into the UAE. Thank you. One of our key KPIs and strategy objectives is to close capacity utilisation. So another successful quarter and another successful year in terms of closing the capacity utilisation across the portfolio. Again, approximately 16,000 seats in the private schools. And as you saw on the previous slide, now up to averaging 12,700, with the actual student numbers is above that in terms of our present numbers today, and we have positive outlook looking forward. I'll cover that only at a high level in the presentation later. In terms of the government partnerships, again, the charter school and ESC are all but at capacity. The closure there is in the Dubai schools PPP, and again, we are looking at a very positive picture for the 1st of September 2023, the new academic year. Thank you, Nora. I won't spend long on this because it's repeating in just in a different diagrammatical format. The first slide. The key for US investors is that enrolments are up and therefore revenue is up, and therefore EBITDA and net profit have moved substantially forward. Thank you. We always are encouraged by the Taaleem board to look at like-for-like performance. So taking out the acquisition of Jebel Ali School and the impact of the two new campuses at Jumeirah and Mira, it's worthwhile just looking at the performance of, say, our existing legacy schools, our new schools, and our principals, and you'll see that within year performance again is good for our premium schools. Revenue is up, EBITDA is up, and net profit is up. Government partnerships, again, just a reminder of the strategy here and the expected uplift of these three different verticals within the PPP. This year has witnessed a further growth of Abu Dhabi charter schools, the additional Dubai schools, Nad Al Shiba, and further ESE schools. The good news is that later in the presentation I will give you the detail of this, but the headline is we have another 3,000 students coming into the charter schools for the year ahead, signed and agreed, and the contract has been signed. And also for the ESE schools, we have another 4 schools coming online, so an additional 2,600 students into the ESE. And the first 4 ESE in the year ahead will also receive their KPIs, and we have some good indication of KPI achievement in the Abu Dhabi charter schools, and we'll declare more on that in Q4. Thank you. So again, growth in terms of like-for-like, student numbers are up, enrolments are up, revenues up, EBITDA's up, net profits up. We were busy this week on media, Bloomberg, CNBC, Dubai Eye, all local channels here, and very positive press on our strong performance. I'm going to pause there and hand over to Arno for some high-level financial feedback.
Thank you, Alan. So good afternoon, everybody. Let's turn first to the earnings per share. This is a reflection of the growth of the earnings during the 9 months period. As you can see, it's a growth by 10.2%, with 22 fils per share compared to 20 a year ago. Thank you. Then turning to the balance sheet, this is Since August last year, there has been three key changes to this. First, the growth of the balance sheet by more than 540 million. And this is driven obviously by the IPO itself. So as you can see, the shareholders' equity has grown dramatically, it's a surprise. We have as well an increase of the cash and cash equivalents, the current assets, just because we have received the IPO proceeds, and as you know, we have deposited them and make them work until we fully deploy them. And finally, we have used part of the cash flow from operations and from the IPO proceeds to repay part of the debt which was sitting on the balance sheet pre-IPO or post-IPO for an amount close to 200 million. Thank you. Here, just the key message is that our net debt is mechanically negative compared to the previous 9 months of last year. This is because we have received precisely the IPO proceeds, whereas our bank borrowing has decreased, as you can see on the table. What it says is that we have ample room to continue our growth journey through the development of the 4 new greenfields and through any acquisitions that will be suitable for the shareholders of Taaleem. Thank you. In a nutshell, what we have done with the IPO proceeds, we have benefited from the fact that through the deposit, it will boost the net profit for the year by 22 million. We have reduced the finance cost by reducing the debt sitting on the balance sheet. As you can see, the positive impact is 9.5 million compared to the forecast we had established in October before starting this process. And finally, in terms of use of the equity proceeds, so far we have deployed 16.4 million of equity. This is obviously combined with debt to start the funding of the construction of DBS Jumeirah and to do some work as well on DBS Mira. Thank you. Finally, here on the cash flow from operations and cash conversion, as you know, the cash conversion is a reflection of our free cash on the EBITDA. It's sitting between 97%, 122% over the last 2 years, but this was a full year. In May, it's sitting only at 10%. This is absolutely normal, no concern here. It's just because May is a specific month where we don't have yet started to collect the tuition fees for the next academic year. It will start later in the year. In terms of capex, as you can see, we have spent 30 million so far during the year. 11 million is related to the maintenance capex. We are sitting at 2.5% of the operating revenue, which is in the range that we have practiced historically. And in terms of expansion capex, you can see we have spent 19 million mainly for the construction of DBS Jumeirah.
Thank you, Arno. And a reminder, as I said at the beginning, if there are any questions that are not covered today, please get in touch with Nora, our investment relations manager. Her address should be on the presentation at the end. Turning to strategy and looking a little bit forward, I know that the management should only be declaring what we actually have right now at Q3, but as we gaze into a 5-year strategy, I know that many of you are analysing that and looking ahead. So in terms of the growth of the existing portfolio, as you're aware, we were hovering around 70 to 71% capacity utilisation. Our schools are performing well. Normally, at the end of an academic year, we would still have, a fair proportion of seats to fill across the portfolio and a very busy summer ahead for our admissions team. Across the portfolio, on the last day of the academic year, we were looking pretty good for the 27th of August, I think it is, or the 29th of August for the start of the academic year. Further progress in the UK portfolio with Jumeirah Park, Emirates Hills and DBF Pool and Jazz moving in incredibly into the sort of 90% capacity range, which is fantastic. Our IB schools continue to grow, a significant uplift in Raha Khalifa City for the year ahead. As you know, this was controlled by regulatory approval at the outset, and very positive picture in Jumeirah Baccalaureate School and Greenfield International School, which again, like Jebel Ali, will move into that sort of capacity utilisation. So our schools are performing well on the back of strong academics and a strong economy. The extension of the government partnership, again, I've announced that there will be more charter and more ESE. The Greenfield, I will give an update on the next slide, but again, we're moving forward with our 2 new DBS schools and the strategy for the last 2 schools. And in terms of acquisition, we have agreed a framework at board level for acquisition. We have recently looked in detail at 2 acquisitions at management due diligence level, and we'll continue to monitor that over the summer. The thing that I can talk about concretely and with great pride is our KHDA, sorry, the slide should also read ADEC inspection outcomes. I've just focused on Dubai here. The last formal inspection of our schools was in 2019. There are around 92 elements in the unified inspection framework, and schools need to have 61% of these elements are outstanding to move a school to outstanding. So like for like, the schools that were inspected in 2019 moved up in 54 of these elements, and this year across the portfolio we've significantly improved performance and have moved up in 84 of these elements. What this means is that our schools nudge closer to getting over the line to the next uplift across the 6 performance standards. So 1 school, Greenfield International School, therefore moved into enough elements up to move the overall rating, and we're very proud to announce that Greenfield moved from good to very good, and we continue to target the whole of our portfolio moving to very good and outstanding. That is the 5-year strategy ambition. In relation to Greenfield, it was also won the International IB School of the Year. So this is a school that's really moving forward under its new principle. Thank you. So update on strategy line by line. DBS Jumeirah construction is now ongoing. I passed the canal last night and saw 2 massive cranes on our plot. So, you know, no issues with opening in September 2024. DBS Mira, as I alluded to in the previous Q2 report, the strategy there was to pause and to gain 2 plots of land and merge them, and then conduct a traffic impact study in order to slightly move the capacity of the school from 1,600 to 1,800. So the delay there will actually be beneficial in the long run in terms of profitability. So now Mira, the land lease is signed. This was all across the media this week, and it will open in September 2025. Believe it or not, enrolment interest from parents has already begun in both schools. The strategic decision of the management and the Taaleem board is to move the next 2 schools into super premium, which will improve profitability. We have clear land marked and agreed with ADEC in Abu Dhabi for this super premium school, and equally with a government entity in Dubai for the super premium school. We can't declare this a signed at the moment. Hopefully Q4 will bring that news. Why have we moved into super premium? We believe that there is room in the market for Taaleem to move into that price point, which is highly profitable. I would argue that there are 5 top schools in the United Kingdom, and that no existing brand in the UAE has one of those top names. We are in negotiation with one of these schools to bring that product with the support of the Dubai and Abu Dhabi government to the UAE. The final, in these schools, we are targeting to open the prep school in a top UK independent school. The lower school is called Prep, and we are planning a timeline to open these prep schools in 2025, both in Abu Dhabi and Dubai. The next point of information is the update on the ESE and charter schools, which I've already announced. 4 new ESE, 2,500 students, and 1 mega large Abu Dhabi charter school with 3,000 students. Remember that in the management contracts in the Northern Emirates and in Abu Dhabi, student numbers is what counts and not really number of schools. The KPIs relate to the amount of students you have. So it's actually better for us to have 1 school at 3,000 than 2 schools at say 500 students. Thank you, Noor. In terms of M&A, I believe I've covered this. As I say, we have a clear strategy. It has to be value accretive. We're looking for schools with capacity utilisation that Taaleem's management can improve the academics on. And as I've said, in the recent months, the Taaleem board and the management team have intensively evaluated 2 propositions. Thank you. I will pause and hand over to Arno for the forecast landing.
Thank you, Alan. So just on the forecast landing, we are very pleased to announce that in terms of EBITDA, we should be over by 30 million compared to the actual of last year at the end of August. For the net profit, we will be over as well by 30 million plus. And in terms of retained earnings, depending obviously on the final number for the net profit, we should be over by close to 50 million. In fact, 45, 46 million probably. All of these numbers, however, and I attract your attention on this, that's very important, are subject to 2 key parameters which will be clarified by the end of the financial year. The first one is the revenue cut-off year end computation. As you know, based on an IFRS standard, accounting standard, we need to recognize the fact that the financial year and the academic year are not finishing at the same time. So this year, financial year 22-23, we recognize or pre-book 4 days of revenue corresponding to an estimate of 8 million. This number can still vary depending on the actual enrollment that we will have at this period of the year. And we recognize it for 4 days based on the 10 months recognition of revenue and based on the forecast gross revenue of the next financial year. This explains this kind of number. And it's a net amount because at the beginning of the financial year 22-23, we took out more than 2 million for the same reason. That's the first parameter. The second parameter, which might have a negative impact from a pure accounting aspect, is the fact that the governance of Taaleem is currently reviewing a long-term incentive plan proposals for management. And as when we will know the financial parameters of the plan, it will be possible to evaluate it and see the financial impact for this financial year and the next ones. So subject to these 2 key elements, this number that you see on the left-hand side of this table are the basic where we plan to land at the end of this financial year. Thank you, Alan.
Thank you, Arno. Thank you, Nora. I am very aware that as a former headmaster, I like the sound of my own voice, and I've slightly overran on my target of 20 minutes. I just want to summarise by thanking you again for joining this call, and thank you for your investment in Taaleem, your ongoing investment and interest in Taaleem. It's been an absolute pleasure to meet with you face to face, either in Dubai at our central office or in investor meetings, and also it was a pleasure to meet many of you in London. We end Q3 with ongoing double-digit growth. We are on track, as Arno has just said, to continue to deliver robust results, not only in terms of finance, but also importantly for our industry in terms of academic results for our children, and we must never lose the fact that that is our focus. The greenfield projects are moving forward. We continue to take a disciplined approach to acquisition, and when we have met you face to face, that has been welcomed. That whatever acquisition Taaleem decide to move on will be value accretive and will be in the best interests of our shareholding. So in terms of investor relationship, please continue to network with Nora, and both myself and Arno will be happy to meet with you or ask questions. Myrna, I'm going to pause and hand back to you for any questions.
Thank you, Alan. If you'd like to ask a question, please click on the raise hand button, or if you prefer, you can type your question in the Q&A chat box. We will take the first question in the chat from Heron Neto. Are you planning to pay out any dividends? And if yes, how much per share?
Yes, we shared the guidance for the dividend at the time of the IPO. This guidance remains unchanged. What we said is the following, that we will continue to distribute dividend as we have done in the past, and we might potentially increase the dividend payout as the earnings will be growing over the medium and long term. So without going into too many details at this stage, because we are only at the end of Q3, and obviously we'll disclose this during Q4, we plan currently to distribute a dividend.
Thank you. The next question in the chat, are you considering the pipeline expansion? Do you have enough deposits to cover capex, or will you be going for borrowings?
Sorry, Myrna, can you repeat the question?
Considering the pipeline of expansions, do you have enough deposits to cover capex, or will you be going for borrowings?
A mixture of debt and equity.
So in fact, we have enough. We have raised, as you know, 750 million during the IPO of equity. This is the first base. We have a second base, which is the fact that our operations are generating free cash flow on a regular basis for significant amount. And the third element is obviously looking at each of the projects, be them greenfield projects or potential transactions. We look at them on a standalone basis, and we combine always debt and equity for each of them to try to boost the return and make it more profitable for the shareholders over the long term. So we have plenty of resources available, ample capacity to grow further the business, and we don't have any concern on this side.
Thank you. We'll take the next question from Harry Welton. Please go ahead.
Hi there. Thank you very much for the call, and congratulations on the numbers. I had two questions. Oh, actually, yeah, two questions mainly. First is just in terms of the utilization chart that you showed with the premium schools, improved asset utilization, and government partnerships. I think it was quite early on. Could you help me understand what the growth potential number is, like how you compute that, and like what the implication is?
Yeah, good afternoon, Harry. Lovely to hear from you again. In terms of capacity utilisation, again, you know, we're always cautious. There's still 3 months to go. We don't expect any shocks, and if anything, we're looking at improvement. Just to be clear, by curriculum segment, the UK curriculum, 3 of the DBS, all the DBS schools are now full. JAS, we are actually incredibly looking at the figure even being at 1,900 students as a target. You know, the school only has 2,000 capacity, so it's just year 12 and year 13 in that school. Jumeirah Baccalaureate School in Greenfield are performing very well, and again up to about grade 10 are full, and we're now targeting, pushing the principal to get into the sort of 90% capacity. Uptown continues to progress well, you know, around 1,300 students for the year ahead. AAG around 530 to 550 is the target. Raha Khalifa City, remember, 3,000 seats, so that's a lot of the gap that you still see there. I think 1,200 today, and we're targeting another 200 students as the students move through the year group. Raha Gardens is obviously full. I think that's our portfolio. Yeah.
Taking your question from another angle, if you consider that, and based on the actuals of last year, which are obviously have been disclosed, if you consider that a student in a premium school of Taaleem makes on average a profit of 4,000, if you consider here the gap of 4,100 plus students, it's easy to assess what will be the impact if we are filling today the schools with the current fees. In terms of government partnership, the scaling up is happening. We target, as you remember, probably more than 30 million, 60 million of revenue moving forward, generated by this vertical.
Yeah, sorry, I never covered. The only real gap in the government partnership, because ESC schools and charter schools tend to be 100% capacity, the gap there is in the Dubai schools PPP, and the target for the principals is to fill these schools. Now remember, the key for the Dubai schools project is in future years when they scale up. So I think Murdif is 950, Barsha is 1,250, and Nadal Shiba's 450, and these schools are targeting to be at capacity for the year ahead. I hope that helps, Harry.
Yeah, so that 24.5% growth potential number, is that basically taking the 22-23 enrollments as a base and then assuming you get to full capacity? Is that how I should read it?
Correct. Yeah, that's right. So it's 2020. Yeah, so it's a
reduction in the capacity gap between the two periods.
Correct. It's 12. There's around 12,500 students in our schools today, and there's 16,500 seats roughly. So that's the 4,000.
And 7% of the total is coming from Raha 2.
Exactly. Raha Khalifa City targeting 1,400 students, but still 3,000 seats.
Right. Okay. So there's the 1,600 gap there to capacity.
Yeah. The major gap there in the IB, which is why the IB always appears to be performing worse than the UK, is largely Raha Khalifa City.
Gotcha. Okay. Okay, that's really helpful. And the next question is just this point on moving up the ratings, and like I think you showed the I didn't quite understand the I think you said it was 90 there's 90 measures that they get evaluated on.
Yeah, I was really hoping nobody would ask for a technical question on this, because the inspection framework is obviously quite technical. It's in the slide. So basically,
I don't want to know I'm not that interested in the technicalities. Actually, my question was more like where the biggest opportunity is from your schools, like in terms of, I think you mentioned the GIS increase from good to very good.
If I'm honest, the big school for us is Jumeirah Park. It's already, as you will know, Harry, our most profitable school. The target for next year is to move Jumeirah Park from very good to outstanding. It's still a challenge. There's still a lot of elements that need to move in that school to make it outstanding, to get 61% of the 92 elements to actually be outstanding before it tips. If we can move that, then the fee increase there could be multiplied. So that really is our target school.
Okay, and then in terms of practically speaking, what are those kind of things that need to be done? Is it the big ones that would move the needle? Is it something to do with facilities or?
No. It's academic data. It's down to the principal and the academic team. So the key measure is teaching and learning, which leads to academic progress of children in qualification. So it's about the principal getting 75% of the students in their SATs, in their GCSEs and in their A-levels to an outstanding, sort of A-star type grading. So that's where a lot of the work is going in. As you know, we already have that in Abu Dhabi and Rahat in our IB diploma results. And we have that in Dubai British School Emirates Hills in its A-level and GCSE results. So the target now is to move Jumeirah Park. Incidentally, Greenfield had the highest diploma results in our whole portfolio and fourth in the whole of the UAE. And Greenfield is an inclusive school, not a selective school. So, the next IB school to probably make the jump will be Greenfield.
Got it. Okay, that's clear. So it's mainly sort of academic results, which I suppose is kind of quite difficult to control, but.
Yes and no. Just without again boring the audience, it's also there is the A-level, GCSE and SAT, but there's also interim annual results that are as a national testing agency through a company called GL. So it's actually about even your year 3 or grade 3 pupils doing well in their academics. And Jumeirah Park is performing very, very well. All of the data in that area sits at outstanding and very good, but it has to all be outstanding.
Ari, maybe to dispel one of your comments when you raise this question, there is no need to additional capex to support the move up to a higher rating.
Yeah. Okay.
It's not this question.
That's helpful as well. Okay. Thank you very much.
Thank you.
Thank you. We have a couple of questions from Shankar Putanvitil in the chat. I'll read them one by one. The first question is there any change in capex planned for DBS Mira considering the increase in capacity?
No, I'll let Arno answer that. It was actually more about a traffic study and the merging of two plots and just slowing down the design, which has led to the delay. But the capex cost largely remains the same. We can actually do this through skillful timetabling of rooming. The increase in capacity mainly comes in the high school, so that it doesn't actually require more classrooms. It's more about the management team being able to say timetable science and mathematics and English better, and it was more about a traffic study that was keeping the school in the lower numbers. I hope that helps, Myrna.
Yes, clear. Thank you. The next question is, what is the target timeline for opening the 2 super premium schools? Is it September 2025 or September 2026?
It is the management and board target is September 2025. Please appreciate that, you know, regulation in Dubai and Abu Dhabi can sometimes, you know, delay projects. The design, we need to get all of the land approved. We need to move through a complex approval structure in Abu Dhabi, and that has started. Both of the schools need their academic and business plans signed off by ADEC regulation and KHDA regulation. And then, as I've just mentioned, you've got things like traffic impact studies with the RTA. So, you know, we have seen in Mira we've seen in Jumeirah where everything has absolutely went according to plan, and the school will open without any doubt in September 24. Mira, we've delayed for a year, so our target is to open a preparatory school in 2025 in both Abu Dhabi and Dubai, targeting around 300 to 350 students, and during the first year to complete the phased construction of the large school. Both plots, again, I'm cautious, both plots that we are targeting are large plots, so there should be no disruption, and we did this very skillfully in Raha Khalifa City, where we opened the KG school and continued the construction across the sports pitches of the large elementary and secondary school.
Thank you. And the third question is, are you planning to open prep schools 1 year prior to the full opening of these schools?
Yeah, I think I answered that. I'm sorry if I'm not being clear. So the plan, and it is a plan, it's not in tablets of stone, is to open small prep schools, super premium UK curriculum brand, in September 2025 with around 300 students in both Abu Dhabi and Dubai, while over the course of the academic year 2025-2026 to complete the construction of, you know, the secondary schools and then go forward with the regulatory approved enrolment.
Okay, we'll take the next question from Nikhil. Please go ahead.
Presentation, couple of questions. First one, on the expansion, coming from the previous one of the previous questions, you mentioned for each project there will be a combination of equity and debt. So what kind of, just on an average, what kind of debt proportion will that mean? And also, does that, you know, just to understand, does that mean that the 750 million which you raised through IPO, you know, you have much more capacity to, you have more capacity in terms of dry powder to make the investments over the next 2-3 years. And the second question, more of a general question, with you are launching new schools and there are other your competitors who are also launching new schools. Is there, you know, how do you see the capacity, how do you see the supply over the next 2-3 years? Do you think there are any risks for oversupply and, you know, potential you know, pricing and capacity utilization concerns there? Thank you.
Thank you, Nikhil. Arno will answer question 1 about debt to equity, and I'll touch on the education market in question 2.
Yeah, so typically for a new development project, we try to mix, as I said, to combine equity and debt. The portion is around 80% for the debt maximum, and the rest is coming from the equity. However, depending on the financial terms we can get on the market, and it varies obviously constantly, we might end up with having less debt and use more equity. I'm keeping in mind always that we try to generate a levered IRR over 10 years, over 20%. If you take only the unlevered IRR, which take out the question of the financial structure, then we try to be over 15%. It gives you some parameter. So again, moving forward, all depends at the end of the day in terms of quantum of debt about the financial terms we can source in the market. Just remember one thing, our balance sheet is very low leverage, as you can see on this page, for instance. So we have ample room, as I mentioned, to grow. We can fund through the balance sheet, and thanks to the IPO process, we can fund both the 4 greenfield, which are strategically outlined in this presentation, and we have discussed this many times, and any acquisition which will be value accretive for Taaleem. And obviously, we are looking at both at the same time in parallel and try to complete or achieve this.
Thank you. Just to go on.
Sorry. So you mentioned that 4x is the net debt to EBITDA, the leverage which you can go to. Will that in any ways change your credit rating, or do you think you can reach 4x without any change in the credit rating and any impact on your financing ability?
What we do when we plan for at least 5 years based on the strategic plan, which is reviewed and approved by our board. And part of the review is to check whether our financial covenants are met or not, or are close to be at the limit. And we are not at all in this situation. Whenever we look at the coming period, the 5 coming years, there is absolutely no risk we will touch the maximum allowed by these covenants. So we are very comfortable again. We have ample room. And don't forget that anytime we open a new school, or if we do an acquisition, you can start immediately to generate EBITDA from the school, positive cash flow. So it's as well another way to give further comfort financially. But again, when you look at the 5-year strategic plan, there is absolutely no concern from this viewpoint.
Thank you. I'll cover at a very high level the next 2 to 3 years in the UAE where we are focused. If you take a look at the strategy here and you look at the amount of seats that we are going to add to the Dubai and Abu Dhabi market, we're really looking at around 8,000 additional UK curriculum seats. If you take the current situation, all 4 of our UK curriculum schools are full. And I know you could come back and say, well, you said Jebel Ali is only 92% full, but it's only some spare capacity seats in year 12 and year 13. We have real evidence from our admissions teams that DBS Jumeirah Park, DBS Emirates Hills, Jebel Ali School, Dubai British School Foundation, we could fill them again and again and again. And we're seeing that in quite desperate attempts by parents to get their children into high quality, very good and outstanding UK curriculum schools. Now, every schools group, I suspect, is doing well, and every schools group will be planning expansion. But the market research, both by government and by independent analysis, is predicting in the next 5 years that there will be around 65,000 young people coming into Dubai and Abu Dhabi. Now, we only need 8,000 of the seats in the new schools, and remember, these are regulatory controlled, so we won't even be able to fill the older year groups in those 5 years. And in addition, of course, closing the capacity utilisation in our existing schools. We met 2 or 3 investors yesterday, and they were discussing with us the outlook of the UAE economy, and with the ongoing instability in the rest of the world and the stability offered in the UAE with East European parents coming in, children coming in, the entente with Israel, the ongoing stability and attraction of Dubai and Abu Dhabi to expat Arabic communities, I honestly see nothing but a positive picture. Even if the competitors are also planning expansion, and interestingly, in relation to your last question, I know several schools groups through my networks with CEO, and they don't have the fantastic low leverage that we have as a schools group. So, we're sitting with, thanks to you, 725 million and being low leveraged. We can quickly build these 4 schools, and not everybody is in that favourable position. So even if a couple of the more aggressive and affluent schools groups do build on the same accelerated progress as us, we will still be in a strong position.
Okay, very clear. Thank you very much.
Thank you. The next question in the chat is from Minchi. What's the price range for super premium schools?
Okay, good question. Arno could probably correct me here. A Dubai British school, whether it's in Emirates Hills or Jumeirah or Mira, is around 56,000 price point. We would be targeting a super premium in excess of 80,000, yes. 75, 80,000 yes. For super premium. And if you look at, say, market researchers like EY Parthenon or LEC, that tends to be how they differentiate the price point. Premium is around 50 to 60,000 average. Remember, that means foundation is lower, A-level is higher, and around 75 to 80 for super premium.
Thank you. The next question is from Vijay Harpalani. Could you please explain the decline in G&A in Q3 versus Q2? Are there any one-offs included in Q2?
It's the decline in G&A in Q3.
It depends what point of comparison you take, but usually what happens is the pace of expenses depends on the different lines in the G&A. Say, for instance, the marketing activity usually is most active during the summer to prepare for the new year and try to attract additional students. So their spend is going to happen more importantly in July and August than say in May or April. And you have other lines like this for which the timing of the expense varies, and that explains why the G&A, again, depending on the period you compare with, but why the G&A is lower.
It's a seasonality of the education.
Impact, so, invoicing impact as well from the providers.
And we often see that in relation to costs around procurement, etc., when schools are ordering, say, a lot of pens and pencils and computers, etc., at the outset of the academic year, and that slows over the course of the 12 months.
I think Vijay wants to clarify the question, so please go ahead.
I think your microphone's maybe off, Vijay.
It's not very clear. Can you hear me?
Yes, we can now.
Oh, perfect. Apologies, I think my question was not very clear. So let me clarify. My point of reference is the quarter ended Feb 2023. So where the general and administrative expenses were 32.3 million, right? And if you look at current quarter, it's about 25 million. So we're trying to understand the reasons for the decline. So were there any one-off included in the Feb quarter which inflated the base, or this is like a more sustainable trend? That's what we want to know. Thank you.
No, I don't think it's a sustainable trend. The variance is close to 2 million, which is honestly, in the scale of things, not a lot. And it depends really on the seasonality of the different expenses. So I don't think you can draw any specific conclusion from this small variation from a quarter to another quarter.
Okay, thank you.
Thank you.
Thank you. I think for the sake of time, we'll take the last question from Harry Welpton. Could you please share the number of teachers for premium private schools and also for Dubai PPP?
The exact number, I think I'll have to pause on. Do you have the breakdown of that, or will we answer that via Nora?
We can answer with the exact number, but in terms of quantum, you have more than 900 teachers in the premium school portfolio. And in total, you have 1,700 teachers across Taaleem, including the government partnerships. But again, we will send you an email with the exact numbers at the end of May.
The last question in the chat, also from Harry, what are the fees planned for DBS Mira?
Do you have the exact fees for that? It's a similar fee point to Emirates Hills, is it not?
The average fee year one will be 49.9 thousand, which is below the DBS Jumeirah fee point because the area and the cautiousness in which we built usually our business plan leads to this. So it's not very high given the location and what we anticipated when we put together.
The average fee is 49,000 in Mira.
In year one.
In year one. Is that because of?
Because we have obviously more early years than.
Yeah, so okay, Harry, what you'll have to take into consideration with that 49,000 average fee point is the school at that point is only open from FS1, KG1 to year 6. Cool. So obviously, as we go into the higher year points, that will increase. But again, if you give us that question in writing, we can give you more detail. I'm certain that the fees are declared for DBS Mira because they're approved by KHDA. So we can transparently give you the fees for DBS Mira. As Arno said, the slight change in strategy there from DBS Jumeirah is DBS Mira. If you knew Dubai, the community of Mira is not as affluent as the community of, say, Jumeirah Park, where villas are much more expensive than in the Mira community, or in relation to, say, for example, the Jumeirah 1, 2, and 3 communities.
Thank you, Alan. I think we've covered all the questions in the chat. So back to you if you have any concluding remarks.
Okay, thank you, Myrna, again to EFG for hosting the conference call. Also, thank you to everyone on the call for your ongoing investment in Taaleem. It's another very positive performance by the company, and I would like to take this opportunity to thank you for investing and also thanking the Taaleem board for their ongoing positive guidance and good governance and engagement with the management team. Shukran jazilan. Masalama.
Thank you. Thank you, everyone, for joining, and thank you, Taaleem's management, for your time. This concludes today's call.
Thank you.